Space Mobile Podcast.
We just basically from their phone be seamless, regardless of where you are. We don't want the user even to know that it's connected by satellite. Listen, the opportunity that we have is very, very, very large.
Good evening, everybody. Hope everyone is doing well after a long day. I'm pretty tired, actually, but I hope everybody is hanging in there. I know some of you have had trouble sleeping, just given how the markets have been. I've had trouble sleeping too. But yeah, if you guys could give me a thumbs up, I just want to make sure I'm not talking to myself here. I'm going to assume that everybody can hear me because, okay, I see a thumbs up there. All right. Yeah, so I wanted to get people together and talk a bit about human psychology because I think it's probably a good time to discuss this. I don't have a set agenda. I took down a few notes of things to cover, but I think over the past few days and weeks, we've seen some people behave certain ways, and it's totally understandable. I mean, humans are human and it's just part of natural behavior. And so I wanted to kind of go through why these things happen and what their motivations are, and I think folks can get fired up when they see some of these things, but just recognize that people have certain tendencies, and they may not necessarily have the awareness to understand that, or sometimes people do have motivations that aren't necessarily in the best interest of others, but yeah, it is what it is, and you do you, and I'll do me. But I think just having a discussion about it maybe perhaps will help people become more aware of their own tendencies. But anyway, it sounds like I'm just I'm just talking about fluffy stuff, but yeah, let's dig in. So yeah, what happened today? I mean, I think there was some stuff on Twitter where people went back and forth. Someone who I won't name kind of retweeted something that I had posted about ASTS Space Mobile and said, they got involved when the market cap was smaller. I think it was like 1.5 billion, and it's gone up 20x. And so now it's probably closer to the end versus the beginning. And from a risk perspective, perhaps people should sell some or sell all, and then go into 3 different ideas that this person was pitching. And so initially when I saw that, I was like, oh, okay. I mean, yeah, you can make that argument to a degree that, and I've been telling people in spaces all along, depending on your own financial situation and your involvement and your exposure, just given how much AST Space Bubble has run, it is always good to reevaluate your situation. And if you, just a simplistic standpoint, if you are able to take out your cost basis, and you've made a lot of money, if you can take out your cost basis and also set aside money for taxes, which is really important, because you don't. A big mistake that people make in retail investing is they sell things, they immediately reinvest, and then they don't set aside money for taxes. And then all of a sudden, when it comes time for tax day, which could be April, or depending on how many extensions you get, July or October, they're all of a sudden down money, and then because they reinvested everything, and then they don't have enough for taxes. And so don't make that mistake. Definitely, if you do take profits and you owe money in, for example, 2025, set aside that money, don't touch it, and make sure that you have enough to pay for taxes. But going back to, understanding your position, if you, a simplistic way is taking out your cost basis and then letting the rest ride. Like, if you have a small position relative to your net worth, if it's a few percentage points, which, I think is pretty common, or if it's bigger, it could be 10%, 20%. Some of us who are crazy might have 80% of our net worth in this name. And that's not something that came from irresponsible behavior. It's actually, for a lot of people, they invested very early and it grew to a very large percentage of their wealth. And so other things come into play. If you're sitting on a massive long-term gain, you have to contemplate taxes. For example, I started talking to my wife about, hey, would we ever consider moving away for a year out of New York City? And because if you add up state and city tax, that's 15%. It's another 15% on top of what you already owe, which is pretty nuts. And so if you're sitting on tens of millions of gains, that really can move the needle. And so, and that discussion extends also to your retirement accounts, right? Like if it's not a Roth IRA, but it's a typical, IRA account or 401k, whatever it is, right? Like if you have tax advantage ability to invest and you compound gains without paying taxes, but at the end, when you get to retirement age, if you live in a high state and city tax bracket like New York City or in California, maybe it's worth at retirement. Hey, you know what? Maybe we should move to Tennessee or Florida or Texas, because that money that you pay at the end when you do take withdrawals, like and people should ask their accountants, like you can actually not pay those taxes as long as you move and you can prove that you moved somewhere else. In New York, you have to live outside of the city and state for over 183 days, and they're really like tenacious about checking your cell phone bills, like your location, like all this stuff, making sure that you actually live outside the state. Otherwise, like they'll come back and get the taxes from you. But anyway, but going back to what I was saying before, yeah, in any one situation where you're sitting on top of a big gain, tax planning comes into effect. Do I sell? When you have such a big gain and it's long-term gains, that's why a lot of people, I mean, some folks on Twitter are like, why aren't you just trading this thing, just slapping it around? It's like, well, I'm sitting on a long-term gain. And once I monetize that, I've got to pay taxes. And then I restart the clock all over. Like I've got to, whatever I buy back, it's going to go, it becomes short-term gains. And until I hold it for a year and then it goes long-term. And um, so it's never as simple as people say. Like yeah, I can trade things around in my retirement accounts because that's, that tax bill is not, that's deferred for until I retire. But yeah, I think the other thing I mentioned is if you have a big position that's concentrated like ASTS Mobile, it's important to understand the context, right? Like I think for somebody who bought in at $40, then their risk reward, the way that they think about what people are referred to as margin of safety and risk reward, is different than someone who has a cost basis of 3 or 2, right? Like that person can probably stomach the volatility because, and by the way, like there's very few people who bought in at 2, like they right off the rip, like they bought a $2, position, and there are a few which I've talked to, and God bless them, they were smart. But a lot of people actually and bought in higher. If it was like 10 or 12, I remember there was one person who bought it at 20 when the SPAC ripped, and then it like right after they bought it cratered. And they went through that. They obviously went through fire, holding it all the way to 2 and adding on the way down, but then riding it all the way back up. I was in. For me, it's a bit different because I was in warrants, and I bought. I guess probably my average on my warrants was around $1.20, $1.30, which was great for a period of time. And then, of course, they went as low as 33 cents, which was not fun. But once I exercised those warrants, the cost basis in the stock ended up being like, I guess it was like 12, no, $13 or something like that. But when you have a low cost basis, it's different, right? And if the position has become outsized because of the position is appreciated, then you have a very different perspective than, for example, someone who is buying stock today at 99. And so I think it's important to have that context where the decision is going to be very different for everybody. But I do think it is smart, and I've told numerous people that if you get to a point where you can be financially independent, and let's say, like, I don't know, you have a mortgage. Let's say you have $1 million mortgage on your house, and and your house is worth, I don't know, $2 million, or if you have a mortgage on a house, if your house is like $600,000, you have a mortgage that's 300,000 left, and your position in AST has grown to, I don't know, like $1.5 million. Like it's probably not a bad idea at some point to monetize a portion of that and pay off your mortgage, right? And the reason why I say that is, you know, I truly believe in taking out your cost basis. One of the things that I've been trying to tell people, I guess, over the last year is like, what was your net worth before you entered this position? Like, if you had a net worth of $1 million and all of a sudden you're sitting on a position that's worth $5 million, like, I think it's not a bad idea to just take out your original net worth, and then the rest of it. Yeah, and it's tough. I know it's super tough. Like, there are people who want to own a few 100,000 shares, or they have the target of like, I need to get to 20,000 shares, or and it's tough to give up your shares, which is kind of funny. Because I mean, I go through the same thing too. Like, if I ever have to sell shares, I always think of like, oh, is this like what Steve Larison refers to? Is this the Amazon, right? Like selling Amazon at $2 or $3? Or I remember my wife, when she worked in tech, she's like, hey, you should buy this company called Spotify, or not Spotify, Shopify. And she had like a small position. I think it was like $10,000 in her retirement account. And I didn't really know that much about the company. I was like, yeah, whatever. And of course, like, Shopify just completely took off. It was like an absolute home run. Of course, like, I sold those shares on her behalf because I didn't, after I analyzed it, I was like, yeah, whatever. It's an e-commerce company. But I think, like, it's easy. The thing about investing is, like, it's easy for people to, when you're not familiar with an investment, and this is why I think people are so wed to AST Space Mobile, in that when you've done so much due diligence and you understand a company inside out and you understand it better than any institutions out there, it can be really difficult to give that up, right? And if you really think you've caught lightning in the bottle, which I think we have done here, people become very passionate about it, and we've become this cult. But I think, like, it's interesting because for people looking from the outside looking in, they're like, well, what is this? Like, there's this company doesn't have any revenue yet, and it's going to get crushed by Starlink. I mean, whatever. We can go through the whole litany of reasons why, and that's the thing. Like, when you're not invested, you don't own this company, you're going to come up with every reason why you shouldn't own this company, and why those kooks, those crazy people, like, they're going to be wrong, and you're like rooting. And this is where, like, jealousy and envy comes. You're going to root for it to fail because you're like, oh my god, that thing has gone up so fast, so quickly, it doesn't make sense, and it has to come back. And I saw some people replying like, it's gone up too fast, and nothing goes up like that and stays up there. It has to come back down. And it's like, well, you guys missed, like, when we went down quickly and we were at like $1.90 or $2, right? Like, they missed all the pain to get to this point. And so, yeah, I think there is a bit, and you can get a bit myopic, right? Which is why you try to be honest with yourself, because when you're riding high and if the stock price is at 100, you feel really good. It's like, oh, I'm on top of the world and there's nothing that could go wrong, and the market finally gets it. And then this stock has a drawdown to 36. It's like, you've got all these people on Twitter that just come out and there's like, Abel needs to tweet, and Scott, what are they doing? Everything is wrong. I can't believe the satellite's delayed. And they just come up with a whole host of, like, reasons why they're being wronged, and the stock shouldn't be there, and the company needs to do something about it. It's just that, I mean, that's just like human psychology. It's pretty funny. Um, but when you've gone through this enough times, you understand. And I joke about this, but it's true. And, apologies for people who are here from Reddit, but when the subreddit AST Space Mobile, when it's like bloody murder and they're losing their shit, I mean, that's usually the time when we bottomed. That's a bottom signal. Or conversely, like, when you have some of these accounts like Stone Fox Capital, like this loser, or Pivotal Capital, that is, who mysteriously has disappeared. or Onada Capital or whatever, any number of bears, like when they start coming out of the woodwork and they start, doing their celebration dance that they tweet and say, "I told you so," that's usually a bottom indicator as well. And so it's interesting to get to, on the one hand, it's annoying to see this stuff, but on the other hand, it's like these are really valuable signals. And so it's just, if you are more trading oriented, you can take advantage of that. And so, I mean, over the last few weeks, I think I don't usually talk about numbers, but I figured, let's just have an honest conversation. I guess over the last few weeks, I've probably made $3 or $4 million on trading AST space mobile options because like vol was so cheap. It got so cheap, and people before we had this run up, like people were pretty depressed and upset um, about the satellites being delayed, but then you had the company telling you like, oh, it's coming, like where it's and we've had this discussion of like things are inevitable, like it's inevitable, it's coming, like yeah, can they slip? Sure, but then you're getting, in terms of risk reward and where the options were priced, and you were getting, it was like it seemed like a decent bet, and it's kind of funny because like we're at this point now where the company is about to launch this launch campaign, and the like commercial service is about to roll out, and you had people kind of giving up, and that's why I tweeted that meme of the football players like running to the end zone and then dropping the football right before the end zone. It's like, what are you guys doing? Like, you can't. And I got criticized by someone for saying, "Oh, you're encouraging retail to take risks and you know better." And it's like, no, you totally missed the point. I'm telling people that for the people who've held this position for 1, 2, 3, 4, 5 years, um, who went through all that pain and due diligence and sleepless nights or whatever, like we're at the cusp of why we started this whole thing, like why we invested. And so how can you give up at the end zone, right? And so that was my point, which again was lost on this particular person, who was like, "Oh, you're teaching retail um, to take undue risks and not be smart with their money." It's like, well, no, retail doesn't have to act like a hedge fund. Depending on a person's particular situation, and I remind them that you should be prudent in terms of taking a risk, and not size this position in particular to a point where you're not going to recover from it. But then at the same time, if you know what you own and the company is on the cusp of doing something truly special, and of course there's risks, right? Like you can have a satellite that goes up and it breaks, it doesn't work, or something with launch could happen. But we are at a point now where the company is well capitalized. It's got a ton of satellites in production and ready to go, and it has launch paid for. And so, if you were to, you know, if you were to put that risk on back in 2022 when we were launching Blue Walker 3, and we were running the company by the seat of our pants because we didn't have enough cash um, to make it through a big delay or a negative event. But if Blue Walker 3 failed, or something bad had happened, then yeah, I mean the company would have probably come back, but would have, obviously the stock would have been would have gotten demolished, and they would have had to raise money at terrible levels. Um, but we're at a point of scale in term and capitalization, and we've got partners who are well capitalized as well, where we can take those hits, and it's not a company ending event. And so there is this like when you talk with people and they're like, well, this could either be a home run or it could be a zero. It's like, no, you don't understand the situation. There's no zero scenario for this company now. Like we're at a point where things have developed enough where it's going, if the launch fails, or if the satellite doesn't work properly, oh yeah, there's going to be a drawdown for sure. Like maybe the stock goes down 30, 40%, or maybe goes down 20%. I don't know. It probably doesn't go down as much because we basically have two satellites right now, FM1 and FM2. They're going to launch almost simultaneously. And so if something bad happens to one, then the other one's still going to go up. And so, but this whole notion of like, it could go to zero. Like, that's just absurd. It doesn't make any sense. Like, there was someone who said, well, the margin of safety at 100 is way worse than the margin of safety at 5. Well, no, it's not. Like, do you remember why the stock was at $5? Like, that was back when, let's go back in time. That was back in 2022, 2023, and then of course 2024 when, I mean, let's go back to 2024 when we only had one satellite. We were trying to cobble together additional capital to make sure we had enough runway, and we were building Block One satellites, and that, that the Block One, the 5 Bluebird satellites. We didn't have any definitive commercial agreements yet. We didn't have any. I mean, we had some indications that FirstNet wanted to work with us, but of course we didn't have a test satellite. So who knows? Like, we got to get, or we did have Blue Walker 3. Sorry, I think about it. We had Blue Walker 3, and we were, FirstNet was contemplated working with us, and then, but we didn't, and we had some initial understandings that perhaps there were some government contracts, but it's disingenuous to say that the margin of safety is better at 5. I mean, mathematically, yeah, it makes sense. Like, 5 is a lower number, and you're not risking as much at 5 versus at 100, but that's intellectually dishonest, right? Like, at 100, the company has anywhere between $1.5 to $2 billion in cash. We've got like Golden Dome potentially coming. We've got 8 defense contracts. We've got definitive commercial agreements with Rakuten, Verizon, AT&T, Vodafone, Google, American Tower. By the way, we also have an agreement with them. And then, we have Bell Canada and possibly Saudi Telecom, like, on the way shortly. And then, we've got testing results that have come in, and I mean, this is a huge one, right? Like, we are on the cusp of getting FCC US market access approval. Like, it's a very different story where we are, or level of progress where we are at 100 versus where we were at 5. And so for anyone to make that like, oh, at 5 it was much better than it was at 100, mathematically, I guess, sure, but I can present to you 2 different companies, one at $5 that is on the cusp of bankruptcy versus one at $100 that is about to cure cancer. Like, which one do you want to own? I'll take the one that's $100, like, every day and twice on Sunday. Like, it intellectually, it's just a dishonest, like, argument. It doesn't make any sense. And so I think, when people are throwing around those types of arguments, you really have to take a step back and think like, okay, well, what does it mean? Like, why is the stock at 100? Is it because like the company's made progress? Is it partially because like the market is frothy? Is it because good things are about to happen? And so I think you've got to take that all into account. And obviously, like, yeah, the markets are frothy. And by the way, like, I don't think anybody is arguing against that. Like, for all intents and purposes, like, we've entered into, or we're on the cusp of zero interest rate, like, environment, right? Where rates are coming down, um, the economy slowing down, and what was it, like, the Fed, Powell yesterday said that they're going to stop quantitative tightening. And so, yeah, like, we're kind of at this point and where risk is starting to come back on. And so I remember I shared a chart with Alliant Capital the other day, which showed like Goldman Sachs hedge fund VIP, the names that all the hedge funds own versus the most short names. And that index has completely cratered over the last few weeks. And part of that, I think, is because it's just a risk on environment. And so all these heavily shorted names have like totally rebounded. And, some of them, and I'm sure Space Mobile has benefited to a degree, but that index has now returned to a level where it was, I think, back in 2023. And so obviously you're going to see, you see all the hedge fund accounts on Twitter just crying bloody murder, like, oh, this is not right. These companies shouldn't be trading up here. It's going to end badly. And yeah, I get it, guys. Like, you're on the wrong side of the trade. Like, your shorts are blowing up in your face. And so, yeah, shit happens. Like, that's how finance works. Like, um, you're going to have these periods where you have volatility, and if you can't ride it out, if you're not positioned, then sorry. I think I think that's part of the advantage of retail, where we don't have a risk manager, and you can hold for a long period of time. If you have a drawdown, like if as a retail holder, if you have a 10 or 20% drawdown in your portfolio, like it's not a problem, as long as obviously maybe your loved one won't be happy about it, but as long as you understand the risks that you're taking, you can ride the volatility. Whereas if you have a 5 or 7% drawdown at any pod shop, then your capital is cut. And if you go down to 10, then you're gone. You and your team are gone, right? And so it's a very different approach, and I think it's important to understand that context as well. When people are pontificating and lecturing on Twitter, it's like, well, yeah, you have to abide by certain rules, but for retail, we don't. And so, yeah, sorry, you do, I don't, but that doesn't mean you have to like shit on what I'm doing. But anyway, but yeah, so going back to my timeline, my notes here, I think it is hard, like for people who are running a concentrated book that has conviction. When I mean concentrated, for me, that's I'm usually invested in maybe a handful of names, and some things I trade, right? But I'm probably invested in only 5 or 6 names at a time because I want to know what I'm invested in. But then when you have a small book and it's concentrated, and then you have conviction of those names, and AST is by far like the absolute biggest, like it's a big percentage of my net worth. Um, it's hard. It's hard to own something in that size. And that's why I think, like, when you have the opportunity to take, the mental apart, the ability to take a win, which is like selling your cost basis, or taking out your net worth, or doing something, it's huge, because then the mental the mental game changes all of a sudden, where you're like, oh, I had to win, and now I'm playing with house buddy, and so when there's ups and downs, I really don't care, which is true. Like, it's kind of funny, like as we've gone up, or if we go down, like I'm kind of in a different way from Kook, like I'm kind of indifferent, because I've already won, and then the rest of this, which I have a pretty massive position, the rest of it is just house money, and I can mentally compartmentalize it and be like, okay, this is great. It's like life changing, and I can set up generations are set for life. But then at the same time, it's like I really believe in this company, and I enjoy it, and I want to continue to stay invested, right? And so, but with that, of course, like during difficult periods of time, when the stock has gone down, it's like, there's the mental anguish of like, am I missing something? What if something's wrong? Or, all these things, right? But I think for most space mobile investors, we've gone through so much of that I think people truly understand. They've reached this like point of um, nirvana, right? Where they understand, oh, the volatility, the day-to-day volatility, or the FUD out there, like it's just part of the game, and I understand, but I have conviction in what the company's going to do. Like, someone throws Starlink at you, and it's like, okay, yeah, they'll eventually get there, and there'll be good competition, but this market's going to be big enough for two big players, right? And so in a duopoly, the economics are typically really good, so I'm okay with that. That's fine. Um, but I think, going back to emotions, like, so this is where it kind of gets a little tricky. Um, when you do sell, you have to have the ability to say, okay, I'm going to be fine with it. Like, what if I miss out of this? And this is where, like, you've got to figure out on your own, like, if you sell 10% or 20% or 30%, are you okay with like the stock continue to go up? And that can be hard for people to like come, to be at peace with that. Because then there's this whole range of emotions, and that's why, like, people when they sell, I've seen people, they like completely cash out, and then they have regret, or FOMO, or if they sell 50% or 30%, it's like, just be at peace with what you do, and it's okay if like the stock goes up, and heaven forbid if the stock goes down, like, oh, you can buy some back. But It's interesting because like that money does weird things to people. And so, whether it's regret or FOMO, like once people sell something that they believed in, um, I think, and this is kind of the crux of the discussion today. It's like there's a certain level of decorum that I think people should have, or awareness. Um, because I think like it's the thing in Twitter is it can be pretty toxic, right? Like if people openly say, I sold something and they believed in it, but for whatever personal reasons they sold, then that's fine. And people shouldn't like you shouldn't be ashamed for selling something. Because everybody has I mean, who knows? Like maybe you've got sick family members or you need to take care of some financial obligations. Like nobody should give you a hard time about it. But the nature in which you do that is important, right? So, and if you want to be honest, and for some people like me and others who discuss ideas, like it is important to some extent. Like on one hand, I don't feel obligated to tell people like, oh, I'm buying this or I'm selling this, but deep down inside morally, I'm like, oh, I should let people know that I feel bad if I like, hey, I got into something and then I never tell them I exited. Like there's something that I don't feel right about. So it's oftentimes I will say like, oh, I've exited this, and then people will say, why did you do it? Like, is it because you've learned something bad? It's like, no, I just I set a target for myself and I'm out of this thing, or the circumstances changed, or whatever it is, right? It could be a number of things, and I think this is important where people have to learn to ultimately it's your responsibility, right? Like what I like to say is, I used to tell this to the analysts that I worked with when I was a portfolio manager. I was like, hey, your job is to bring at bats, bring the at bats, and then I'll decide like which ball to swing at, and then because I swung at the ball, if I don't run, then great, and we make money and we're all happy, and then if I swing at a ball and we miss and we lose a ton of money, then that's on me. Like I didn't do enough work. You brought me an interesting idea. It didn't turn out. It's not on you. It's on me because I swung the bat. And that's how people should look at um, Twitter or social media and investing. It's like people will bring up interesting ideas, but it's up to you to do research and to figure out what your risk tolerances are, and did they actually do any research, or and then you're ultimately the decision maker, and so you pull the trigger. Like no one's forcing you to do that. And then it's up to you to decide like when you want to get out, or maybe buy more or whatever it is, right? But I think it's important to have responsibility. And so when it comes to selling, and when I mentioned before, like there is a certain level of decorum and there's no written rules or whatever, but I think like for people who are aware, there's right ways and wrong ways to do it, right? Like if heaven forbid, or not heaven forbid, whatever, I could do it. Like if I came out tomorrow and said, hey, you know what? My circumstances have changed and I'm selling ASTS physical. And by the way, like if I did that and it was for no other reason than just my personal, let's say I really wanted to travel the world, and I've given up all material possessions and I'm going to take the family to travel the world. And tomorrow I say, you know what, I'm going to sell this stock. Then people, I should come out. I will come out and say, hey, I've sold the stock. Here are the reasons why I sold the stock, and the best of luck, everybody, because like I still believe in the company, but my circumstances have changed. That's fine. Like, and people should be like, oh, good for you, man. I'm so happy for you. You did all this work, and you had a high level of conviction. You went through all this pain and suffering, but you believed, and now like you're reaping the rewards, right? And they should be happy for you. And then you walk off into the sunset or whatever. It shouldn't be like, oh, I decided to sell, and then people are like, well, what's wrong with you? That's just like the wrong approach, right? It's not the type of, I don't know, if you had friends and are you the friend that's jealous that someone does well? Or are you the friend's like, hey, good for you, man. I'm so happy and I'm glad that we can share this moment together. Like what kind of person you want to be, right? So then taking that a step forward, it's like for social media accounts, um, if you're look, people can sell for whatever reasons. But what's weird is like when people sell, and let's say like let's take AST Space Mobile, for example. Like if someone is sold at like 70, maybe they sold half their, no, I don't know, they sold half the position at 70 and then they sold all of it at 80. And then all of a sudden, they start posting like, oh, hey, I sold and here's all the risks that really made me uncomfortable. And I think like the margin of safety is bad and the risk reward's bad. And it's just a good time to sell. And maybe there's like a few um, things left, but you're really at the end of the trade. Then it's kind of like, what what what's your angle on this? Like where are you coming from? Right. Because if you're someone who's been advocating for it and then you sell and then the stock goes up even higher and then you start churning, right? You like, um, which is, look, I get it. Like there's people that want to pontificate and are like, well, you should, they want to tell you what to do, right? They're going to lecture and say, well, it's at this point, it's really risky. You should take it off or whatever. Um, but it's not the right way to go out, right? Like I think if you are coming at it from a point at like with good intentions, right? Where you're exiting and you're telling people exactly why you're exiting. And by the way, like there was a Rocket Lab investor, Tim X94. He also was AST Space Mobile investor. I remember, and he's pretty controversial. And when I read his stuff, sometimes I'm like, whoa, that's pretty spicy. But I remember he got a lot of heat for exiting Rocket Lab, and look, Rocket Lab did just fine without him, right? But I think like, but he gave his reasons, and those were his reasons alone. And then, and you got to respect that. Like, okay, like you've made a logical decision for yourself. That's fine. But it's another thing, like if you're selling and you're still bullish about it, but then you've completely sold down and then the stock gets away from you and then you start coming in with like these hot takes of like risks that were already well known and then start making comparisons to, well, like the stock is way more risky here at 100 than it was at 5. Well, yeah, but what's the context? Like what the stage of development was a company in at 5 versus where it is now at 100? And so yeah, I think people, if you're in those instances, it's like, look, you can sell and that's fine. And some people, I guess, like feel the need to justify why they sold, which is fine too. Like, I guess maybe, and I've tended to find like people on Twitter use it as like therapy. Like sometimes when things are down, like, why are things down and all these bad things are happening? Or when they sell, they're like, well, I sold for these reasons and I feel really good. And this is why you should sell too. It's like, no, you can tell people why you sold, but to project that onto other people, like, come on, man. Like, be genuine about it. Like, have some self-awareness, right? You don't need to justify why you sold. Like, everybody sells for their own reasons. But I think like um you can you can tell when people are insecure and when they start using that insecurity to then justify what they did and to project that on others, right? And so that's kind of like the key thing where then you start hearing the arguments, well, it's gone up too fast and like it's all going to come crashing down. And and I think it's important, as I mentioned before, like understanding what angle or what perspective people are coming from, right? Because the context is important, right? Is someone telling you this as a hedge fund manager, or are they telling you this as somebody who sells subscriptions? Like that's a very different. We joke it's a different ball of wax than like just a retail investor who, like myself, who has a different. And by the way, like I've got my own biases and perspective as well. And so I've already told people like I'm an unapologetic bull. And so when you take what I say about AST Suits, well, you should take it with a grain of salt, right? Because I've got like rose-colored glasses to a degree. I mean, it's what has enabled me mentally to get to this point, versus getting basically psyching myself out of the investment and selling whatever it was at $2 or however on the way, right? Um, but it's like I said before, like it's human psyche is pretty interesting when it comes to money because I'll give you an example. Like we had this, there's like various chats, right? Whether it's like Discord or there's like Reddit, there's Twitter, there's people and Facebook too. I'm not, by the way, like this is a funny story. I asked in a real person, myself, I asked to join the Facebook group because I was like curious to see what was in there, and I was not allowed in. So this funny thing to note there, but there was this one guy I remember in this Twitter chat of ours, and he was like an uber bull, and he would just talk constantly about like the company and the positive, the progress it was making and how it's going to change the world and financially, the earnings power was really great and all this other stuff, right? And then it was like a span of a week, like this guy came in hot. He was just like hot and heavy. Well, I don't know about these delays, and what about the ASIC? Like, there could be issues there, like, in terms of getting that produced on time. And it was night and day just in 1 week. This guy was super bullish to, then he was just spreading all kinds of, FUD. And at first I was like, okay, like he's got some concerns, and so people were, addressing his questions, but it went beyond just like asking questions. He was like pushing a narrative. He was like pushing this narrative pretty hard. And like I remember thinking like, what happened to this guy? Like, what's going on? Like, maybe he snapped, like he's lost it. But then and I remember at one point I was like arguing with him. I was like, oh, what you're saying just doesn't make any sense. And then it was like a day later, all of a sudden he like left the chat. And then and by the way, like during this period of time, he was tweeting stuff that was like pretty negative. And then he left the chat. And then it was like a day after that, his account like just like he completed it. And then I remember hearing from it was like, oh, that guy, what happened is I think this is like when the stock was at, I guess it was like at 30 or something. Like the guy sold, he actually sold, and I think he sold his like entire position. Yeah, he sold his entire position. And because he thought like the timing was right, and there was something negative that was going to happen possibly. And then the stock like ripped, and he was so beside himself. He was so upset that he came into the chat thinking like he could influence things. He was like so negative. And then and then yeah, so that ugly part of himself came out where he was like, I missed it. The FOMO kicked in, and I want the stock to go down. And I was going to tweet negative things. I'm going to try to influence all these people to be negative and concerned, and so I can get the stock back down, so I can buy back in. But what was interesting is that, so this guy shared it with someone else who was in the chat, and he had this self awareness to be like, oh my god, what am I doing? And like this is not cool. And so he actually left the chat on his own accord, and then he deleted his Twitter account. And I think some of you out there know who this person is, but yeah, like and that's not like the first time I've seen that. I've seen other instances where people have sold out, and they then turn negative on something, and and this is part of human nature. Like I think I've experienced that too, professionally, where if you're at a hedge fund and you talk with a number of people and you've done well in position and you sell, and you feel this overwhelming sense of like, did I do something? Like, did I make a mistake? Like, and if the position, after you do that, you start becoming all of a sudden a more balanced, a bit more balanced view of like, well, what about like when you're talking to other people about the idea, you're like, well, I don't know, what about these risks and this, because you have this like feeling that you don't want to miss out, or you don't want to be wrong, or you want to be right for selling at the time that you did. And it's just natural, right? Like we've seen some other people who are, whether they're deeply rooted to this position, to this stock, or kind of loosely on the outside but are involved, change their tune, right? Like when they had a bigger position, they're more positive, optimistic, and bullish. And then when their position goes down, they become more balanced, and they start bringing up the what ifs. And so it's just natural, right? And I think I'm not saying like, by the way, like I'm not being negative about that, because it's just natural. But I think it's important for everybody to understand the context of like, where is it coming from, right? And so if someone has is telling you that, oh, the risk reward is not as good. Maybe everything's priced in, and they've gone from a 10% position to a 2% position, or then yeah, by default, like their human tendencies are going to tell them like they've made the right decision, and they're going to want to push a narrative that's going to be more balanced, right? And so it's just natural. Um, no, I'm not faulting them. I mean, that's part of the game at invest in too. It's where, for example, when I enter a position, there's this balance of like, okay, part of me is like, because it's just kind of my personality. It's like, oh, I want to tell other people about it, and I want, and maybe it'll work out, and there is this like positive feeling that you get when you come across an interesting idea and it works out, and you're like, oh, hey, we all won together. But then there's the other part of you where you're just like, I shouldn't share it with other people because maybe I want to buy more. Maybe hopefully it'll go down and I can buy more, and then I'll share it with people. But it's like all these things. It's like human psychology, right? It's just something that you have to grapple with. And so I just, and then there are some trades that you do where you're like, I don't want to tell anybody because I'm doing something stupid. So maybe it'll work out, maybe it won't, but I definitely don't want to get people in trouble. But I think when it comes to, the understanding where people are coming from, the other thing that I guess I would add in there too is options. And this is like the big one, right? Like usually the people who scream bloody murder and the most vocal when things are not going well are the guys who are long, short dated options, like long, short dated calls or long, short dated puts, where they like, dear God, I need the stock to go up, or dear God, I need the stock to go down. And they'll be very vocal about it. They'll like, they'll be very, they'll make sensational type of tweets where management needs to do something, and my God, this company doesn't communicate. Or if they want stock to go down, they'll say, oh, the thing's been delayed, and who knows like if it'll work, and maybe Verizon's going to walk away from AST Space Mobile. Usually it's like people who have short dated positions, like they're like the most vocal, or whatever it is, right? And I think that's important to understand too, because there are some people out there who sell covered calls, and they think it's like a great strategy, which it can be. I mean, it's basically writing insurance, right? When you sell a covered call, you're giving away all the upside, you're collecting some income, but you've got all the downside, right? But oftentimes people, when they sell covered calls, they're like, hey, look, here's AST Face Mobile. Like it's at 50, what was it? I guess a few weeks ago, it's at $50. And I'm going to sell these like $60 calls and $70 calls. And I'm going to collect a healthy $4 and $2 or whatever it was. Right. And then of course the stock rips in their face. And then all of a sudden they've gone from being positive about the stock to bringing up all the things that could go wrong. It's like, well, have you heard about this company called Starlink? And I don't know if there's launch capacity, and how do we know that these satellites even work? And it's like, guys, come on. Like, it's just, you're being so transparent. Like you sold not only like, and by the way, some of these people are like, oh, I sold covered calls. And then they become bearish all of a sudden. It's like, oh yeah, I guess that didn't work out for you. It's like, I remember looking at Wall Street Bets the other day, and the subreddit too, where people were posting like, fuck me, like I sold these calls or my puts got evaporated. And yeah, like that's the game you play. Like in options, you're going to be contorted into hoping for outcomes that aren't necessarily going to be in your control, or oftentimes are out of your control. And so, for the guys that, when the stock rebounded to 50 from 36, and people were selling call options, I was telling people like, why are you selling them? Like, yeah, things might get delayed here or there. You might luck out and collect the premium scot free, but we are going back to that the gif of the guy running with the football and dropping it right for the end zone. Like you are that person. Like you're selling vol, which by the way, like I think volatility on options was at a 3-year low in September and October for AST Space Bubble. So not only are you selling your upside, but you're selling it like so cheaply. But people are doing it, and so I think I think that's where some of the angst has come from too. For some of these people who advocate like selling cash secured puts or selling calls. It's like, okay, yeah, I mean, if you're going to advocate those strategies, then fine. But don't cry when things go against you, and then start telling people the opposite of what you were a few weeks prior. Um, but yeah, I think going back to what I was saying before about people's motivations, and this applies to, let's we'll talk about our friend Stone Fox Capital. This guy who yeah, I guess he has a subscription service, and he's been an AST bear, I guess for the last, I don't know, he popped up like recently, I guess for the last year and a half. But yeah, this guy, if you look at his Twitter engagement, and he's like a contributor to Seeking Alpha. No one really engages with him. I don't know how many subscriptions he has. He touts that he has 50,000 followers on Seeking Alpha, but it is what it is. But I think for people who sell subscription services, and that's a lot of people. Like, and by the way, like I get it. Like, some people are made to research, and this is true in the investing world, where sell side research or analysts who work at hedge funds, like they're really good at researching things. They're not necessarily, or they may not have the DNA to pull the trigger or to manage risk or put risk on, and that's okay. And so selling subscription services is fine. It's a totally legit way to make your life livelihood, and especially for young people who are building wealth and are trying to build a business, like that's great. But I think also it's important to understand where subscription service sellers are coming from, right? Like they're there to put out like bait, to engagement and lay down markers. And what I mean by that is, for people who do subscription services, like they'll lead their engagement by saying, I bought this stock at 2, or I bought this stock at 5. And of course, like whatever stock they're talking about, it's like at 200 or whatever it is. And it's like, if someone's leading you with that type of line to build credibility, like then you're like, red flag should go off. It's like, okay, should I be really listening to this guy? Like, why do they need the content of what they put out should be more important than like trying to beating their chest, like, well, I bought Tesla at $5. Okay, good for you. Like, you were lucky, right? I mean, a lot of people are lucky. But tell me, like, what's your investment thesis? What are you doing? What are you about? Right. So I think it's important, like, to understand the motivations of these people. Like, what are they selling? Like, when they're tweeting and maybe they're picking a fight with, I don't know, AST Space Mobile shareholders, like, what are they doing? They're trying to engage people. They're trying to bring people in. And the important thing for people who sell services are, and I had mentioned this before, is like, they often are trying to place markers, right? What do you mean by that is like, markers meaning like they're going to tweet, hey, the stock market is going to crash in the next 3 months. And they tweet that earlier this year. And then they tweet it again 2 months ago. And then they tweet it again now. And then they tweet it again 2 months from here. Eventually, maybe they'll be right. And they'll be able to go back and say, and they'll retweet and say, see, I told you guys the stock market was going to crash. Or, this guy's doing Fox Capital. I remember when the stock went from like 50 to 36, he went back to one of his markets. And he's like, see, I told you that the stock was going to go down. And of course, like, yeah, it went down to 36. By the way, like, for any high growth, speculative company that is on the verge of, revenues, but is not there yet, like any growth company, I mean, you name it, like even mature companies like Meta or Google, like they had massive drawdowns, right? Like, for any growth company, when you should expect a 30 to 50% drawdown. Like, that's a feature, that's not a bug, which just happens when there's uncertainty and people are trying to discount the future, like, potential of a company. That's what's going to happen. But this guy tweeted out, some warnings, and then of course, like, the stock went down to 36, not having nothing to do with what he was saying, but of course, like, that was this like visceral reaction to SpaceX buying EchoStar's AWS forward H block spectrum, and people losing their shit over that. And then, of course, hedge funds, the smartest guys in the room, who are long EchoStar, are like, hey, I'm going to go short AST Space Mobile because it's a great pair it's going to be a great carry trade. Like then, they shorted that thing. They shorted AST all the way down to 36, and then look at them now. Like what an absolute shit show for them. I mean, what a terrible trade. But yeah, these guys who sell subscription services, like they're there to get their name out. They want to take credit for, and that's the thing. Like when they tweet, they're going to talk about their credibility and how they got things right and how they're doing things better than others. And that's where, like, I joke with Tap. It's like they're going to stunt on you, right? Like they're going to try to build up their credibility because that's what they're selling, their service. And so you'll see, I mean, you guys all know, like when you see on Twitter someone selling their subscription service, they like show their stock price performance or their portfolio performance and be like, you need to ask your whatever subscription service that you have now if they have real audited results like I do, or like whatever it is, right? Like it's a contest between them. But I think understanding that context is important because for the most part, like these guys, unless you're just doing it for entertainment, like typically just ignore them because they're there trying to get your attention and then hopefully get your dollars. And there are some good ones out there, by the way. Like MC Cunha, this guy that I've gotten to know who, he's also invested in Empathia, but he's made some great calls. Young guy. I think he's smart. His write-ups are really good. And by the way, I'm not selling his service, but I'm just giving props to him. But yeah, I think it's important to understand, where those guys are coming from and their goals. And so, and honestly, like, don't take them seriously. Like they can write negatively about any number of tickers. And by the way, people are free to do that. They can write negative, they can write positive. If you're short something and write something positive about, then it's a free world, right? But it's important to understand like where they're coming from, how they eat, like for some of the guys who sell subscription services, are they really managing risk? Like, they're selling subscriptions, but are they actually putting capital to work in these ideas? Like, how much capital are they putting to work? Like, yeah, I'm long AC Space Mobile, but I own one share, so what does that mean? Like, that's not really having skin in the game. And now if one share is like 100% of the net worth, then I guess they do. But yeah, it's important to understand where those guys are coming from. And then the other thing is hedge funds, right? So I mean, they're always going to talk their book. And so if someone's running a hedge fund, they're gonna talk their book, and this includes AST bulls too, right? Like they're kind of aligned with us. If they're long or if they're short, they're obviously running counter to us. But yeah, they have a tough job, and so I think it's important, like for guys who are running hedge funds, when people are kind of lecturing about risk management and what things that are silly that they're not involved in or maybe on the other side of, you've got to understand like they come at it from a very different angle, right? Like they've got risk parameters, they've got limited partners who invest capital that they've got to report to, and so they don't have your interest in mind all the time, right? And so oftentimes they will talk their book. The famous one is Bill Ackman. When he's long something, he'll go on to CNBC and talk about it, or if he's short something, he'll go on to he'll go back up there and talk about like why the government's wrong about something, and they should be cutting these programs which happen to fund the company that they're short. So yeah, it's important to understand that hedge funds are not, when those guys are talking on Twitter or wherever, like everybody's talking about. And by the way, like that applies to me, it applies to all of us, right? Because if you're long AST Space Mobile, you're going to be biased to the positive. And obviously, like it's important to be to understand the risks and to be able to identify those risks. And if there's a problem or change in the thesis, then you've got to be smart and do so. But yeah, I think for people who are managing hedge fund money, it's different. It's a different game, and the risk tolerances are going to be different. So oftentimes when they look at retail and they're like, oh my gosh, you've got a 10% of your portfolio or 20% of your portfolio in AST Space Mobile, like you're asking for it and that's too risky. Well, yeah, in the context of managing a portfolio, a diverse book, a hedge fund, it is like no hedge fund's going to have a 20% position in AST Space Mobile. Although maybe Ryan O'Connor is in the crowd, maybe he does. But I think like that's where and that's where people like from the hedge fund world they always think like, oh, retail's dumb. Like I'm the smartest guy in the room. They don't know what they're doing. I'll be, I have more information than them. I know better than them. And they're going to get whatever investment that they're in, they're going to get demolished, right? And so it's I think it's important to understand that because that's who you're playing poker with every day to day, right, in the markets. And so those are the players who and I truly believe this, like the ones who are actually going onto Twitter and pushing a thesis like that they're short something or whatever, like oftentimes, like again going back to Pivotal Capital or some of these other guys, like the ones who are most vocal are typically ones who aren't really running that much risk, or they're in trouble, like they're in a position and they're in trouble, and they're like now going to become vocal about it on Twitter to try to sway opinion or sentiment, which we saw Pivotal Capital doing, like as AST ripped in his face, or Onada Capital, whoever that guy is. These guys will come out of the woodwork and start posting negative things. It's usually because they're positioned the other way. It's not, you'll see trolls who will FUD positions and they'll tell you like, oh, I have no interest in this whatsoever. And it's like, oh, then you find out that they're working at the competitor, the company's competitor, or that, or they're short. But it's pretty simple as that. But I do think, for retail, it is important to recognize like your own risk tolerances and your financial situation, and if you're like Kook, where the guy's like on a mission of God and he doesn't want to sell any AST Space Mobile, then and he's okay with that and he's financially fine writing that, then that's his situation. It's not your situation. If you've got obligations and you've made life-changing money, but those obligations, by paying those obligations down and basically unburdening yourself to have a more having a free lifestyle, you should do that. You should consider it. To what extent, maybe it doesn't have to be all or nothing. And I think that's the other thing. There's like this mental thing where they're like, oh, if I sell 10%, it basically feels like I'm selling everything. It's like, no, you're selling 10%. It's just part of it. And by the way, like, I'll go back to the time when I had warrants. I had like almost 1 million warrants, and yeah, I had to sell some to exercise the rest of them. And the number of shares that I had back then, at the time, once I exercised the warrants, I had more shares back then than I do today. And that's just the nature of it, right? Like over time, I did sell some here and there, but the value of my position today is like three x what it was back then. And that's because like the stock price has performed and it's great. And so you can sell some and still be in the game. And it's funny because there is this fear. It's I guess the other side of FOMO, where people don't want to sell a single share because they feel like they're going to miss out. And an extreme, this is an extreme example. Some of you guys know Grandma Party, who's this account that when things go bad and when things were bad, it was just constant FUD and negativity and just like calling for the heads of management. And I knew this person during the 2021, 2020, SPAC boom, and when times were good, like the guy was riding high, but then when times were bad, he was like just absolute venom just to everybody. Like, I wish I'd never met anybody. This is bad management. It's a complete scam. I'm just negative stuff, and just was tweeting stuff too. And I would go to him and say, hey, you know what? Like, as a friend, um, and why don't you just sell? Why don't you just sell a position? Like, this thing is like is such a cancer for you. This is like when the stock was in the single digits, like maybe 5, 6, 7. It's like, why don't you just sell? It's like it's weighing on you. So, and just not good for you. Like, just sell. And he was saying, no, but the problem is that if this does extremely well, I'll never be able to live with myself. Which, to be fair, it was smart not for him to sell, because then the stock did really well. But yeah, but then I was like, well, okay, I get that, but then what's with all the negativity? Because like if you believe that there's this small probability that you are going to be right, then what's the point? Like just mentally write it off and put it aside, and but there's no need to like negatively, you know, affect other people, like bring them down. Which by the way, like this guy was so negative. I'm pretty certain like he probably had a hand in forcing some people to sell, which is a really sad thing. But yeah, it's like why and then you're being so publicly negative to management. It's like, and this is a time when the company was scrapping by and doing its best because it was on the cusp of signing eventually signing Verizon. This is like, I guess, January of 2024 when they had to do that brutal equity offering, right? They had to do that to bridge themselves to finally get Verizon on board, which was a very complex, partnership to work out. But it's like, why? Okay, so you own this company, you think there's a small chance of success, but yet you're gonna like give it to management. And by the way, you're like calling for the head of Abel Avalon, who founded this company. He's like a key man, right? Like with you want him to get fired, which like if he's not at the company, then the company doesn't exist. Like there's no logic in you don't make any logic, little sense in your behavior. And but there's people who do that, and so that's why I think the yeah, it's just money investing. Some people are built for it, some people are not. And I think recognizing where you sit and your tendencies and your strengths and weaknesses is really important. Like that's the first step, right? And so if you are a gambler and you have a hard time holding on to money and you just like the thrill, the action, um, maybe on the one hand, there's some positive aspects of that, which I have some of that as well, which can lead to investment success. But on the other hand, it can lead to your downfall or detriment, right? Because like Kook and I talk about this in Tut as well, where there's oftentimes you don't, over trading is where you end up making less money or losing money. Like just buying and building things that you have conviction in. Like the hardest thing is not to touch it or not to do anything about it. And I think a lot of people have a hard time coming to grips with that. And so it's important to understand that those aspects. The other thing is like, if you're looking to spend a decent amount of your time investing, you have to understand like, how much time do you actually have? Because there's people, and I know there's a lot of space mobile investors who are like, I didn't get any work done today. And they keep saying that for like days and days and days. And it's like, okay, maybe you're spending too much time on this, but and I know it's hard. But the reason why I mention that is, oftentimes people will push this narrative like, hey, if you invest in the market, you need to have a diverse portfolio. No, you don't. You don't need to have a diverse. Actually, I'd argue against that because diverse meaning like 15, 20 names. As a retail investor, you're not going to have any edge in that, and it's tough to manage that many names. To know if you have a full time job to know any like some surface level information about those companies and keep up with them, it's really tough. Like if you don't have that much time, I would argue like then just invest in the S&P, an index, right? Like that's probably the easiest way to go. But if you do have time, um, and you think you're good at, research, and then importantly, there's a decent community out there or people that you can work, whether it's like, uh, a circle of friends or neighbors or whatever it is, or maybe it's social media, where you have the ability to discern like what's real, what's not on social media, then yeah, then you might run your own portfolio. You might have a few names, or whatever it is. Like you could have your portfolio could be 50% S&P, and then you're like, okay, I'm going to tell myself I'm going to allocate 10% to five names that I know really well, or I'm gonna push myself to know really well. Like I think that's like an okay way to run a portfolio. And obviously it depends on like where you are in life. If you're young, you can take more risk. If you're older, then you should probably be down the risk, and looking at more income type of investment opportunities. But I think this whole notion of like having to run a diverse portfolio, like that's the quickest way to underperforming the market. Especially if you don't have time. If you have a full-time job, then when are you gonna have time to research? Like, and by the way, like you're not going to watch Mad Money and get ideas from Jim Cramer. Like that's the quickest way to ruin. Because I mean, to his credit, I think he does a lot of great investor education, but this whole like, speed analysis of like saying whether to buy or sell and all sorts of like that stuff just doesn't work, right? But anyway, I've been rambling on for quite some time. I I hope this is helpful. I'm gonna take a quick look at any questions or comments. Let me see. Okay, there's some funny stuff here. Oh boy. Uh, Someone has a question on warrants. Okay, these I guess this in particular is SPAC warrants. If warrants, let's see, in warrants when the stock reaches 1150, it needs to be above that for 20 of 30 days. What if the stock price hits 18? Can the warrants be exercised the following day? Oh yeah, this is a very particular question for SPAC warrants, and this is typical, but then there's also some nuances because it depends on the warrants. Sometimes they change the features, but um, for warrants that have $11.50 strike, once they, this is post IPO and the shares, the underlying shares have been registered. That warrant you can exercise for shares at 11.50, and so obviously if the stock is at 8, you wouldn't exercise it because you're gonna have to pay $11.50 to take delivery of that stock. Stock's at 8, it doesn't make sense. It's just like a call option. However, if warrants and SPACs have a cap of $18 typically, and so what happens is if the warrant trades above $18 for 20 trading days within 30 consecutive days, then the company has ability to call those warrants and force you to either, to force you to exercise them, right? And so that's what the feature this person is asking about. So warrants are like long dated call options. However, if the stock trades above 18 for 20 or 30 days, the company can force you to essentially exercise them. When you exercise them, that's for 11.50, and then you'd have to pay $11.50 to take delivery of the stock, and then obviously you get the upside between 11.50 and wherever the stock is trading once they call them in. So it's not as if like if the stock trades at 18, that's all you get. If the stock, once they call and the stock keeps going to like 30, then the profit you made is the difference between 11.50 and 30. The other thing that I've talked about this for warrants is that a unique feature for SPACs is that if the company is acquired for a majority cash, then warrants actually get taken out for Black-Scholes value. And so that can be very valuable in that even if the company gets taken out for well below the strike price of the warrants, like say, $2 or $3, but it's for all cash, then what you will get is the company will value those warrants on a Black-Scholes basis, and so you'll actually get paid for those warrants. And so, I mean, just making this up, like if the company were being bought out for $7 and the Black-Scholes value of that warrant at that point in time is $3, and the company will pay you in cash $3. So that's kind of a cool feature about SPAC warrants that not many people know about. But I've written about Satisfy, this warrant that I was buying under a penny, and the company got taken out for cash, and those warrants ended up, the company got bought out for $3 in cash, but the warrants ended up being worth 87 cents, and so that was like a huge return. But yeah, that's an interesting feature of warrants that in M&A they can have this like pretty significant upside. Let's see here. I had a $4 cost basis in Rocket Lab, slowly trying to build a good size position. It started to run up, and I had the bright idea to sell coverage calls around 12. She never looked back. It's like high school girlfriend you cheated on. She left you and went on to be rich and famous. Yeah, that's an apt example. Yeah, selling covered calls, like it's an income strategy. A lot of people pitch it as like a fun and safe way to collect extra income while stock is like, I mean, they hope that the stock trades sideways. In high, and then of course people get tempted by in high volatility names. They're like, oh my gosh, I can collect this fat premium. Well, those stocks they have high implied volatility for a reason because they can move. And so when you're selling covered calls, always be mentally ready that you'll get assigned and your stock gets called away. It's one of these strategies that works until it doesn't. And so just like being long those calls, right? Like being long calls in general, you're going to lose money until that one time it hits. And the thing I like to tell people about trading options, if you're going to be long options and short options as well, is like you better have a very good sense of timing, um, and price, right? Because if and those things are difficult, right? Because you can have a very good sense of a company, like some catalysts are going to happen, and you think the stock price is going to go higher, but then just like Trump has shown us this past week, if he has some tweet about China and the entire market goes down, every stock has beta, co-movement with the market. And so you might be right on something, but then because of macro factors, you end up losing. So options are always risky, but yeah, covered calls, they work until they don't. And when they don't, usually it's going to be a time where you're going to be really upset about the outcome. So yeah, I mean, I think maybe you can when selling covered calls, like do it if you really feel a need to do it on a part of your position. But I highly recommend don't do it on your entire position. It's just the quickest way to regret. Um, let's see some other questions here or comments. Let's see here. Let's see here. But yeah, I think the forum trader had a good post earlier today where he kind of outlined, yeah, I think it's hard mentally for people to get around the fact that, oh my God, this stock's at $100, the market cap's at like $32 billion. And it's easy to kind of throw into the meme bucket. I think somebody, Lynn or some account was like, here's the top list of multi-billion-dollar companies with no revenue. Well, yeah, Sherlock, this company has no revenue, and well, it will this coming quarter, but people, whenever they make these like sensationalist charts or they try to convince you that something's overvalued, it's like, well, but what opportunity, like what are people discounting the future? Like when Starlink was launched or SpaceX was raising money, it's people weren't valuing SpaceX based off of what they were doing at that point in time. They were valuing them on the potential in the future. And so I'm sure, and whether it's Tesla, any other names like where you had like SpaceX when it was valued at, and this is like a Tim Farrar special, right? Like over the years, as SpaceX continued to raise money at higher valuations, Tim Farrar was like, this shit will never happen. It's never going to work. It's way overvalued. And it just kept marching along. Like, it went from 10, 20, 30 billion, 40 billion, and 100. I remember he like posted like, this is way overvalued. He'll never earn an economic return to justify its valuation. And lo and behold, like it's at what, 450 billion or 500 billion. And he had this mea culpa, I guess it was like 2, 3 years ago, where he's like, I was wrong about Starlink. It was right. I mean, he was like fighting Starlink the entire way. And then he finally, like, in a very backhanded way, he admitted that he was wrong. And then he said, like, Starlink's going to dominate, communications, and it's going to put everybody out of business. And it was like literally like an overnight post, which was quite funny. But I think, that's the other thing, where people get worked up. I mean, it's funny. It's like a tale as old as time, right? Where in the U.S., especially where you have capitalism and free markets, you're always going to have these naysayers who, obviously they missed an investment and they want to validate their feelings and justify why they missed it and why they won't touch it now. It's like, well, AST Space Mobile is interesting, but Starlink will crush him. And then it's like argument over, game set match. But then they forget, like, where did Starlink come from, or where did SpaceX come from? And years ago, the same people were saying like, oh, SpaceX, they'll never be able to compete against ULA and the prime contractors like Ariane, all these companies, Roscosmos, the Russians, like they're just never going to be able to compete and launch. And then lo and behold, like this scrappy startup, they did it, and then they became the dominant provider. And then Starlink, the same thing, like the scrappy startup, they became dominant provider. And so it's just kind of funny where when people use this Starlink or SpaceX argument. It's like, well, hey, Sherlock, shit for brains. Like, where do you think those companies came from? Like, where there were massive incumbents, and they came in with game changing technology and of course execution, and they disrupted industries. And so you're going to tell me that that's not possible? Like it ends with them? Like no, like this is like the American capitalist system where companies go through I mean, for the good companies that continue to innovate and disrupt themselves, like they continue to stay relevant. But it's just kind of funny. It's a lazy argument, right, when people talk like that. But anyway, I've been rambling now. What was going to be an hour, I guess, is an hour 20, so maybe I'll cut it short there. But I think, yeah, today, and over the last few weeks, yeah, people at the end of the day, like, don't take it too seriously. People show their true colors, and it's hard. It's hard. Being investing is hard, and missing on opportunities and selling too early, and boxing yourself in by selling calls or whatever it is, right? Like, there's a whole host of reasons why people do what they do and how they change over time, and just recognize that for what it is, and it's okay. Like, I myself, sometimes when I see this stuff, I get upset. But like today, when it happened to me, someone retweeted my post and then was basically saying, like, this thing's overvalued and I sold out. I was like, okay, you do you, man. Like, that's what you want to believe. That's how you can wake up tomorrow and feel good about yourself, and that's fine. Like, it's no sweat off my back. But I guess the thing that's a bit odd is, like, when people then go from that point to then, hey, I'm going to go on to a Twitter space and broadcast, like, why I did what I did, and why, you know I want to pat myself on the back, and I think everybody else should pat me on the back. It's like, come on, man, just have some awareness. Like, it's just it's so transparent. Just you look like a fool. But anyway, I'll end it there, and I hope everyone has a good evening. I still believe that we will breach 100 this week, and as some of you know, the Antonov with the Bluebird 6 is now in India. So yeah, we're on the cusp of it. It's going to happen. But yeah, everyone have a good night, and we'll meet again in the coming days. Take care.
Thanks for listening to the AST Space Mover podcast. If you enjoyed this episode and you'd like to help support the podcast, please share it with others, post about it on social media, or leave a rating and review. To catch all the latest news about AST Space Mover, make sure to subscribe. Thanks again, and I'll see you next time.
We're doing something very, very big. And I think with this technology, we can really affect billion lives. AST Space Mover is the only company that has proven technology to deliver cellular broadband connectivity directly from space to your everyday smartphone. People will just basically turn their phone and be seamless, regardless of where you are. We don't want the user even to know that it's connected by satellite. Our role is to bring this into reality, always in partnership with the MNOs. Listen. Waffles.